Every week, finance YouTubers pump hundreds of different stocks.
Arista Networks,
Nike,
Amazon,
Micron,
Intel,
Nvidia,
Tesla,
is SoFi,
Jack in the Box,
Texas Pacific Land Corporation.
It's a big mess, quite chaotic, too many inputs that brings mostly confusion and sometimes even harm our portfolios. To make some order, I've spent the last week watching the top 37 finance channels, tracking every single stock they recommended in this Excel spreadsheet to build the ultimate list of 12 stocks. Like always, I want this video to be special, engaging, to earn your like, so I group them in 4 distinct levels of risk. Level number 1 are the top 3 safe stocks. These are the most voted stocks overall. The winner is a mega cap, a very famous company, you can try to guess, that was recommended by 14 different channels. Level 2, the top 3 contrarian stocks. 3 stocks that were heavily hyped 6 months ago, but now YouTubers are a bit afraid to talk about them. Level 3, the hyped stocks. These are 3 stocks that are more hyped right now than back in January. Level 4, the top risky stocks. These are small caps, I did not even expect them to get one single vote, instead they got recommended by multiple channels. Let's start with level 1, the safe picks. These are the winners overall, the most voted overall. This tier is dominated by the Magnificent 7. Clearly, megacaps have a massive advantage in this ranking because they are the most popular, the biggest company in the world, so it's just natural that more creators recommend them. They are safe. In third position, Amazon. 11 YouTubers suggested it in total, including big names like Jeremy, Parkev, Couch Investor, but let's listen to Adam Ko.
So Amazon is involved in the AI capex build-up. Is that their only business? No, Amazon is in the ad business as well, right? In fact, Amazon's advertising business has overtaken YouTube. Amazon is in logistics. Amazon is in e-commerce, right? They know a lot of other stuff. So these are what I call related to AI, but it's not just AI, other stuff, right? So that is another 20% of my portfolio.
In second position, it's actually tied with 11 votes as well. The only difference is that this is part of my portfolio, so I'm gonna be the tiebreaker and place it second, Microsoft. As you can see, we have many creators, among them Joseph Carson, Everything Money, The Traveling Trader, and fintech.
But that actually puts them on track to hit the $120 billion in planned spending on AI this year, which to me shows that this might actually not just be an infinite money pit of spending as much as possible on AI, and Microsoft is actually following the plan that they laid out fairly closely here. Now, does this mean they're going to automatically win the AI race, or that they're out of the race because they're not spending enough? I don't think so. In general, all of big tech has plenty of money to continue playing this AI game as long as they need to. But what I like about Microsoft at today's prices is they seem to be playing the game fairly responsibly, and yet their value isn't fully matching their numbers.
First position, recommended by 14 people. It's a massive consensus, as you can see. Adam, Daniel Pronk, Christopher Noor, ticker symbol U, Jeremy has a massive position, a ton of people love it. I'm talking about Meta. Over the past week it already jumped in price, so it might be a little bit more expensive than some weeks ago, but I think it's still cheaper than the entry price of Joseph Carson.
So the first company that I believe meets this dynamic of an attractive buy today is Meta. It's been one of my top picks in 2026, and it doesn't change today. I still think that Meta is a unique combination of very fast growth, high operating leverage, an incredibly strong financial business for its core business, and its growth paths are very attractive. When we look at Meta, it also trades at an 18 times forward PE. That gives you a lot of wiggle room with the valuation. In the short term, the valuation could always go lower. Investors can sell out of Meta while they go into different things, but long term, this sets up for a very attractive buy.
This concludes the top 3 most voted stocks overall: Amazon, Microsoft, and the winner, Meta. Really solid selection, safe. And I agree with the crowd that Google and Nvidia at the current valuation are a little bit less compelling. And of course, Tesla and Apple are much lower. In fact, not a single one of these 37 channels recommended Apple or Tesla, and honestly, I don't like them either at these prices. Let's move to level 2, the Contrarian stocks. 6 months ago, I made a similar research, and you can watch it in this video right here. And back then, there are some stocks that got recommended and hyped by 6, 7, 8 different channels back then, but now not so many creators are still talking about it. I find this interesting because as a contrarian investor, when everybody gives up, it might be the signal that the bottom is finally in. In third position, we have Mercado Libre. Back in January, several channels were calling it one of the best buy for 2026, but lately only 3 creators are talking about it. Couch Investor, Brian Stoffel, and Daniel Bronk.
I first started buying Mercado Libre in 2024 at $1,800 per share. I thought that the stock was offering value at $1,800 in 2024. And when I take a look at Mercado Libre's underlying business, I would say that so far, based on controlling my inputs, I've actually made a good decision. Because the underlying business is growing tremendously, the growth rates are accelerating, its market share is growing, and I believe the moat of this business is actually deepening. So while the share price has come down over the past year especially, I think that it's just gotten cheaper and cheaper and cheaper, and the future returns of the share price from here going forward have gotten higher and higher and higher. And that ultimately is why I have bought so much more. I made it a larger position in my portfolio, and it's also why I continue to buy.
Second position of the contrarian picks, shift for payments. Have you heard anyone talking about 4 lately? Exactly, gone, disappeared. Everybody is completely silent. Back in January, 4 different creators were hyping it, but now no one made a video about it. The only one that I know that has it in his portfolio is Couch Investor, so let's listen what he has to say.
Shift 4 has actually had quite a lot of momentum over the past couple of days, right? This was a $38, $39 stock or so, we're now at 47. Did something happen? Honestly, no. I haven't seen any headlines. It was cheap. Slowly but surely, maybe yes, we're getting some momentum with the stock. Still haven't sold the shares on that one.
In first position, Adobe. I personally think it's a buy and I made a video about it. Watch it. But a lot of people got burned on this one, so they're currently licking their wounds in silence. Parkev, Everything Money, Christoph Noor keep talking about it in a positive way. I know that Arya keeps holding it, but while 6 months ago everybody was saying Adobe is the best buy for 2026, now only hardcore value investors have the courage to say something.
Adobe is another one of the disappointing stocks in my portfolio. I bought Adobe stock earlier this year and I'm down on my position. At $205 per share, it's well below the calculated fair value at over $380. Adobe stock is trading at extremely low valuations, so I feel that all of those risks from artificial intelligence are already incorporated into the share price, and so the company has room to improve from here.
Honorable mention that almost got in the top 3 contrarian picks, PayPal. YouTubers seems to have lost all the hope about it. Personally, I'm still holding, but I'm also quite depressed. I wanted to highlight these stocks because the fact that are way much less popular now compared to 6 months ago with YouTubers might be an interesting signal no one is watching. Let me know, by the way, let me know which of the top 3s you find more useful, the safe, the contrarian, or the level 3, the hyped picks. This is basically the exact opposite of level 2. People are talking about these companies way more now than they were 6 months ago. In third position, ServiceNow. 6 months ago, almost no one had it in their stocks to buy list, but now is recommended by Zip Trader, Jeremy, the Traveling Trader, and Future Investing.
ServiceNow is a very modern customer relationship management tool, along with many other software products, that is sporting still continuously 20+% growth rates on $3.7 billion of overall growth. But the most important thing that we see from ServiceNow is that each and every customer cohort per year ends up bringing on more and more services to the business. So the longer you've been with ServiceNow, the more you end up spending with them. Whenever we take a look at these statistics, you have accelerating average revenue per user and an accelerating amount of customers. That's a very good sign.
In second place, Broadcom, ticker symbol AVGO. A couple of channels were recommending it already in January, but now we have a massive lineup of big names backing it, including ticker symbol U, Joseph Hogue, Fintech, Mark Russin, Jose Najarro, the Traveling Trader, and Business with Brian.
When Google, Meta, OpenAI, or Anthropic wants to build its own AI chip to get out from under NVIDIA, it co-designs that chip with Broadcom. And Broadcom also sells the networking that wires those chips together. So it gets paid twice on the very same cluster. And that AI business is accelerating, not slowing, because its AI revenue grew more than 140% just last quarter. And it is on pace to nearly triple this year, with management guiding it to nearly double again the year after.
In first position, rising back once again, Palantir. A lot of people were surprised that was not even part of the ranking 6 months ago, but now is recommended by ticker symbol U, Future Investing, Couch Investor, Jerry Romine, Invest with Henry, and of course Amit and Tom Nash.
Number 5, and the one I'm most excited about is Palantir, but wait, before you shoot me down, Tom, Palantir again, hold on. People have been bashing me for this pick since it was $6, $10, $50, $80. Tom, Palantir again? Yeah, it's now at 130. Look at the fundamentals, my guy. Look, it's 56% revenue growth, 360% operating income growth, 84% free cash flow growth, 45% EBITDA margin, a rule of 40 of 140, which might be the highest in the entire stock market, okay? And it's 62 forward PE. That's not even that expensive. And it's down 10% over the past 12 months. And since November 2025, it is down 50%. It is trading at a huge discount. This is literally the operating system of the software world of AI.
ServiceNow and Palantir are down in price while the fundamentals keep getting stronger. Let me know your take on this, but I personally understand the fresh interest in these companies. Level 4, risky small caps. These were not recommended by many people, but are small companies with a market cap under 10 billion, so it's actually incredible that different YouTubers are recommending them at the same time. In third position, Mobily. It's an autonomous driving company with potential application into robotics. It was suggested by Business with Brian and Zip Trader.
Right now, Mobileye isn't exactly a cash flow generating machine. However, long term, I think it's going to flip to being very aggressively cash generating. And I think if you bet on it before that flip, well, you have a lot more of a potential for asymmetric upside. This company long term, I believe, is going to build and acquire its way into being first a self-driving autonomous vehicle company, and then a long-term robotics company in many different areas and spaces in the overall autonomous economy.
In second position, Intuitive Machines, ticker symbol Lunar. It's a space exploration company with just 3 billion market cap, backed by Ross Givens and MarketBeat.
Okay, so Intuitive Machines, LUNR, we're going back to the moon, and they've got to have a vehicle to travel around in. And I think that LUNR, outside of that technology, is doing some pretty amazing things.
And in first position, this is probably the biggest opportunity, risky opportunity in the whole stock market ever, even though I'm very biased because it's my biggest holding, Duolingo. It's recommended by Asymmetric Investing, Joseph Carson, and Antonio Linares.
And Duolingo learns something about how you learn every time you use it. So what keeps you motivated, what doesn't, in a learning process. They are actually building ontologies, which is a proprietary data set that lets you train an AI model no one else can, because no one else has access to the data. Obviously, there was a lot of hysteria this winter about AI killing everything. Duolingo hasn't recovered as much in terms of stock price. It's obviously up something like 50% in the past few months alone. So again, leaning into the pain at this quote-unquote bottom was the right decision instead of crying and selling. But the bottom line is these two companies just do better and better as AI continues scaling, and they effectively have no actual competition. So if you look at Duolingo, in terms of language learning, they have something like 80% of the DAOs worldwide.
Guys, it's not easy to produce this kind of video completely for free, so if you like this new format, please consider subscribing and leaving a like. Thank you for watching. Drop a comment below if you want to know how many recommendations got a specific ticker. Here is another video decided by the algo to keep you watching YouTube. It's a cool video, I'm sure. See you next week. Peace out.